Welcome back to Reds Roundup. In this video, we're going to be looking at a few ways that I screen for stocks, how I look for them, how I look for new ideas, and what I'm looking for when I look for ideas. So let's just get right into it, skipping the intro this time. My first source is Dataroma. So this website, it's a really good one. It shows the aggregated investor base with a lot of money and who are really well known in the world. So everybody here, we're going to click on the super investor tab. Everybody from Bill and Melinda Gates Foundation to Bill Ackman, Carl Icahn, David Tepper, who I've been really interested by recently. Just quite a few notable figures here. And I like to keep track of quite a few people, what they're buying, what they own, even how much money they're working with. I find it very interesting to look at. Like Bill Ackman is working with 8.2 billion, and Carl Icahn's working with 17.4 billion. I find that interesting to see the quantitative element to how much money they're actually working with and how quickly they can move in and out of positions. I find that very interesting. So I might just go look at the new ones. Some new 13Fs have come out recently. So I'll look at Seth Klarman. He's well known. He wrote a book that sells for like $1,000 or something. It's the artificial scarcity of the book that keeps people interested in it. So his biggest position is in eBay. This has been one that's interesting to me because if we go here, I like to go to Seeking Alpha and eBay. I think this one is really interesting because just of the way that it's been valued recently. You have stocks like Amazon who are similar in terms of internet selling. I know they're far more diversified. I'm not trying to say they're the same business, but Amazon selling for 100 times earnings and eBay selling for 14 times forward earnings. I don't know. That's a little bit curious to me. eBay is well known for their internet reselling site, and I'd say that the growth of that must be decent through COVID. Like obviously the stock price we see has almost doubled. But not only has he invested in it, again, if we click on it, this is why I like the website, it shows us everybody else who owns it. So we see here Seth Klarman, he owns the biggest percentage of his portfolio of anybody. Pat Dorsey, a few of these other characters I don't really know all that well, frankly, but we can see that it's of people who have it as a small percentage, they've been buying, and otherwise they've reduced a little bit. So that tells me that eBay at current prices is not necessarily the greatest buy, but it is an interesting thing to note that once it drops down, maybe you consider buying there. We could do that for a number of other stocks or positions, whatever. Here's another one, Bill Ackman, that I like to look at. I make update videos about him occasionally, but I was gonna make an update video. I saw this come out. I was like, oh boy, I can make an update video. But then I realized he hasn't done a thing. He's literally just reduced a few of his positions by a couple of percent, probably freeing up a little bit of cash. We've all seen that he's on CNBC. The people are talking about him on CNBC rather, about how he's doing a credit default swap trade, I believe, with a couple $1 million here or there, similar to his trade that he made back in March or whatever when he bet against the markets. He's doing that same sort of thing. He thinks the payout is going to be really good. I don't know. That's not really my type of trade. But if it's yours, I would encourage you to go take a look at that. So we see here just a number of his holdings. It's interesting to me, frankly, that Lowe's is his top holding, and Lowe's is not actually held in any other big way by anybody else I know. So that's a little bit curious to me that he's highly concentrated in Lowe's, but nobody else really owns Lowe's. And then here's another feature that I like to take a look at, Super Investor Portfolio Stats. top 10 most owned by percentage. We see here the percentage, it aggregates the portfolio of all of the investors they have on their website and sort of makes it into one, averages it all out and whatnot. So we see here that Berkshire Hathaway, a lot of value investors really enjoy Berkshire Hathaway, just because of the relative safety of it. And I think a part of it could be a little bit emotional, knowing that you're buying into Warren Buffett, Charlie Munger, legendary guys in their own right, and just what they're doing. And it sounds really good. Oh, Berkshire Hathaway, Warren Buffett, I'm invested with them. Like, you're probably not going to lose money over the long term. There probably aren't very many people in this world that are better stewards of investor money. So that's a good thing. But I don't think you're going to make the 20% returns that Berkshire made through the 80s and 90s. And so we see here, just quite a few people really just dumping money into Berkshire Hathaway. And that's not even to mention Warren Buffett, who owns quite a Berkshire Hathaway himself. So that's always an interesting one. Let's take a look at the 6-month buys. So we see here one of the big ones, Seritage Growth Properties. I've had that in one of my videos for a minute. I know a lot of people are really interested in that one, knowing that some really big names are getting into it. Monish Pabrai filing that 13D, I believe. I hope that's the right one, where he owns a substantial amount of the company. Eddie Lampert, Guy Spear, and Third Avenue Management. I only know Monish Pabrai and Guy Spear, and I know that allegedly Warren Buffett owns a good portion of it too, and whatnot. So this is always a really good source. If you can find companies that, like, maybe a couple of these guys are buying this time around, like this quarter or whatnot, you might want to take a look at them. The companies that are widely held among these guys, you're going to want to look at them too, just to get a good sense of what's going on. Now we're going to shift over to Screener. So I use a number of different screeners. This one is a free one. You don't have to sign up for anything. You just load it up on the internet. Just search up Stock Screener, and FinViz will pop up. So what I like to search for are companies in the United States. There are just too many Chinese companies that pop up for my liking, and oftentimes I don't want to have to do due diligence to make sure that they're not a fraud, because fraud is pretty prevalent in those Chinese markets. So I like to do a bunch of different screens, but then when I do, I like to look at every single company that pops up and look at their industry and look at their stats and look at if it's something I'm interested just based off the stats. And then if I am, I'll click on it. Like here, I know this one, Big Lots. This is actually something I was interested in for a while. I was interested, not to toot my own horn because there's no proof here, but I was interested right about here. And I just started researching it, and then it popped up quite a bit. And foolishly enough, I decided I'm not going to invest even when it dropped back down. I was planning on it, but then, as you know, I did not. So they say hindsight is 20/20, and I wish I had that one back maybe. But I don't know. It's still interesting to me. It still sells at quite a discount. I apologize if you can't see this, but a PE of around 2 to 3, pretty crazy. Price to cash flow is great too. It's just slight growth. I don't know about its earning power over time, but as we see here, it trades for a massive discount. If you can get your money out of this, it would be quite the investment. So I just look at something like this. I'll look them up here, look at these stats. I don't look at the graphs too much, frankly, and then I'll go to like Seeking Alpha or something, pull up Big Lots here, the retailer. I'll click on the article, the most recent article, X out all the ads, of course. Click on the article, I'll look around the news headlines, and then I'll look at the quarterly reports and the annual reports and just see what's going on with this company. What does management have to say? Where is it likely that the company is going to go through the future, if I can even predict that? if I can't predict that, I'm going to need a very good price to get in the company. I think those are mostly the important things. I'll look at the description. But if nothing really pops to me, if there isn't like a wow, this is incredible, I'll pretty much just move on. I look at quite a few different things every day that I actually do my research. I look at a lot, and I look at a lot of different ideas. I'll even go on Twitter, and a lot of people on Twitter publish ideas, so I'll just look up there and I'll type in whatever ticker. Like if I see someone, they are really pumping OSS or something, they're really happy about that one, I'll look it up. Or one that I saw on Twitter is Curate Retail, QVC, QRTEA is the ticker. Now this one has been really interesting. It's been a guy who I've listened to a whole bunch. It got me interested. I read some annual reports. I read some of the letters, and the management team is uniquely focused on giving the money back to shareholders on dividends, special dividends, and buybacks, and just some very unique opportunities. They issued a preferred share as a dividend, essentially. So they gave the stockholders a preferred share. So that's that for that screener. Let's take a look at this one. So I do a lot of research on REITs because I've been realizing that they have been quite hammered hard in the markets recently. So I'll sort them by asset class or sub industry rather, and I'll look at their market capitalization, and then I'll pretty much just click on every single one of these. So like Core Civic is one that I'm familiar with. I've been familiar with this one when I did a video on Geo Group. This one came to mind, and I'd like to point out something here with this one just as a quick tip. Over the past few months, they've actually tanked because of the election. I think it's fair to say they tanked right before the election, and then they spiked, and then they're going back down essentially. But it's such a low price. I've actually initiated a small position here just because of the incredible price. A lot of people would say, "Oh my gosh, look at how much the price has dropped. Like, you don't want to catch a falling knife." Well, sometimes the knife isn't falling so fast, and you can sort of catch it at the right time. I don't think it could be that much more undervalued, and if it is, I'd be okay just holding it for quite a while because it's selling at like 5 times forward earnings. It's like 50% price to book, and these assets are irreplaceable, and they have long-term contracts from governments. So this is just one example of something where I click on it and it really pops. It pops out of the screen at me and says, whoa, this is an asset that's selling for 4 times earnings, 5 times earnings, and it has government contracts as its pretty much sole source of revenue. And that's usually a very safe thing. If we look at some other property companies like, I think it's FRT, Federal Realty Investments. I'm pretty sure they have contracts with the United States government. If we look at how many times earnings they sell for, it's 43. Granted, the assets of the underlying properties are very different, but in my opinion, there's really no reason I would want to buy this if I could buy Core Civic or Geo Group at such depressed prices relative to what we're seeing here. It just wouldn't make sense, because if you're buying something at 5 times earnings or buying something at 40 times earnings, you tell me which is a better value play. And I don't think Federal Realty is going to see much growth. It's really just people like the safety of it, and they perceive that as somehow greater. But that's not something I would be interested in, just because the return over time is going to be very small, frankly. One other thing I like to do is I like to look at REITs. I don't look at the healthcare ones so much. I haven't been able to find many good deals there. In the specialized REIT front, however, I've found that especially the small cap ones, if you do some research on them, you can find some crazy value, essentially. Power REIT is one of my favorites. That's a micro cap REIT. That it actually is my favorite, and it's my biggest holding. They invest in cannabis greenhouses. Now, who would have thought of a real estate investment trust investing in cannabis greenhouses, triple net lease style? Not me. And if you can do your due diligence on these specialized REITs, I can guarantee you at one time or another, you're going to find some very good deals that are going to offer very attractive returns. Granted, you don't have to do very much investment research, frankly. It's pretty easy to understand stuff. It's real estate. They give you their leases. They tell you how much money they think they're going to make. And they give you the values of their properties, and it's not that hard, frankly, to value some of these companies, and a lot of them have been very mispriced through the coronavirus crisis, despite their relative understandability in terms of their properties. Like here's one. They own timberland. Sometimes it doesn't work as my Schwab screener. So there you go. I would take a look at these specialized REITs and basically all of the small cap REITs in general. They offer some good value if you're willing to put in a little bit of work. And it's not like trying to understand a super complex tech company like Intel. Like I don't think I'm really going to be able to understand Intel all that well ever, but I can pretty much understand a company that buys property and then leases that property out. It's pretty simple. So thanks for watching. Hope that helped. I know this was kind of rambly. That last video I made, the response I got was awesome, being the video of my YouTube struggle where I've just been sort of publicly asking for a little bit of help here with figuring out what I'm doing with the YouTube thing. This video is not necessarily the greatest quality, I recognize that, but I've been a little bit busy recently, and it's been harder. But I really appreciate your responses and the comments on that video. There have been a number of comments that have been very inspiring to me. I don't want to call anybody out by name because I don't want to leave anybody out either, but pretty much anybody who commented on that video, it was highly positive, and I really appreciate it. It really means a lot. And yeah, so I think that's all. I really appreciate it, guys. Thanks.